Good afternoon. Let's get right down to business here. We are doing it live right after the Guy Benson Show now at 3 o'clock here on 790 KBC. And we do all this just before the 790 KBC News Blitz with Randy Wang at 5. Mottek On Money, live on the air, 790 KBC. Streaming live online worldwide at KBC.com. And your on-demand Mottek On Money podcast, KBC.com, Apple, iTunes, YouTube, all of your favorite podcast platforms. Something called DeepSeek suddenly bursts on the scene today, and Deep Sixes, some of the big tech names and stocks. The Chinese artificial intelligence startup DeepSeek launched a free AI assistant over the weekend, which it claims uses less data at a fraction of the cost of what's already out there. By today, DeepSeek had overtaken ChatGPT in downloads from the Apple App Store. Stock futures plunged last night, and the tech-heavy NASDAQ market opened sharply lower this morning. The stocks ended mostly lower as attention on this Chinese startup DeepSeek raised the possibility of cheaper AI development, sparking the tech sell-off. Wall Street darling NVIDIA, known as the Magnificent One among the Magnificent Seven mega-cap tech names, took a hit today, closing down more than $24 to $118 and change, a drop of about 17%. It was a day of significant wipeouts among the tech names, with NVIDIA leading the charge, dropping $589 billion in market cap and the worst one-day erasure for any public company on record. We'll take a deep dive into DeepSeek later this hour with Daniel Ives, Managing Director and Senior Equity Research Analyst covering the tech sector at L.A.-based Wedbush Securities. He'll be joining us live later this hour. The Dow came in for a closing gain of 289 points in all of this, settling at 44,713. The S&P 500, which hit a record high last week, pulled back about 90 points today to finish at 6,012. And the NASDAQ taking a big hit today, down 612 points, or 3.1%, settling at 19,342. The index recording its largest one-day point and percentage drop since December 18th. The Dow, by the way, outperforming the NASDAQ today by 3.7%. We rarely see that. The last time we saw something like this, the largest outperformance since November 9th of 2020, when that margin was 4.5%. Investors selling the tech names across the board today as they worried the emergence of this Chinese artificial intelligence model would threaten the dominance of AI darling NVIDIA. NVIDIA was the NASDAQ's biggest drag today. We'll be taking a closer look at all of this here. Stocks wrapping up a strong week last week after President Trump took the oath of office as the 47th president. Investors taking in a lot of the moves he made on crypto, immigration, as well as energy policy, including the new $500 billion Stargate joint venture focused on AI infrastructure, which propelled the S&P 500 to a record high for the first time this year just last week. Bitcoin and the other cryptos seeing a wild ride. Bitcoin briefly falling below the 100,000 level for the first time in about a week on the DeepSeek news. In fact, we saw Bitcoin get as low as around 97,700 earlier today. Looks like it's recouped some of those losses. We'll take a closer look at Bitcoin here in just a moment. Oil also pulling back today by about 2%, pressured by the Trump administration's tariff talk and concerns about a potential slowdown in AI-related power demand. Closer to home, flooding and mudslides in the Los Angeles area following the first significant rainfall in months. The rain has helped the Army of Firefighters here in Southern California put out most of the remaining fires in the catastrophic fire zones in the Palisades, the Hughes Fire in Castaic, and the Eaton Fire in the Altadena area. Cleanup and recovery efforts continue, and now residents and businesses are making the tough choices on whether to rebuild or leave the area. The early estimates put the total financial loss of the L.A. area fires in the $50 billion range. President Trump declared a national emergency on Friday after visiting the devastated Pacific Palisades area and met with residents and held a town hall meeting with local leaders. I'll talk about all this with real estate agent Tom Costello, Estates Director at Tom Costello Estates, which includes the Pacific Palisades and Malibu areas. But first, on your money, the markets, the economy, DeepSeek, cryptos, and the whole works today. Joining us live now, top-ranked money manager Ken WINANS, President and Chief Investment Officer at WINANS Investments, which you can find at winansinvestments.com. Ken WINANS, also a market historian, the author of numerous books, including Investment Atlas 3, which just came out recently. Investment Atlas 3, Creating Wealth Using Historical Trends. Also Forbes magazine contributor. Be sure to check out his latest articles. Also, he's got his crypto credentials, too. And most importantly, host of Winning with WINANS, heard every Monday evening at 6 p.m. right here on 790 KABC. Ken Winans, good afternoon to you, sir.
Frank, you never bring me in on a dull day. I appreciate that. There's just nothing worse when you have one of those and you have nothing to talk about. But that is not the case today.
Yep.
And, you mentioned the Magnificent Seven, but let me just jump in. There was, and I believe a lot of it was machine-driven selling. I really do. We think it's wonderful and fine, but we're finding that the machines actually eat their own. But, you're looking at Sterling Construction, Comfort Systems, Fabrinet, Quanta Services, Broadcom, Eaton. They're very obviously these theme stocks pulled back. But, as I've talked to people today, let's not forget that all of these have had tremendous run-ups. And, they were priced for perfection. I've just said to a couple of folks who find that they were very greedy on the way up and they were unwilling to take profits on the way down. And just to say, you need to question a buy and hold strategy with these high beta stocks.
A lot of people are wondering, is this a dot-com type bubble moment, or is this a good time to buy NVIDIA at these levels?
Well, it's interesting because, I've had people say, Ken, you're a technician, and I know you talk about the 200-day moving average or our golden mean, and it is true that literally after hours, NVIDIA's stock and the futures of it have popped back right back above the 200-day. But I would just say this. We've got a long week of earnings coming out, actually the next 3 weeks, but particularly this is very tech-heavy this week. And so, if you want to step in and buy, I believe in the long-run prospects for NVIDIA, but at the same time, it's very volatile, and you could see more downside if any of the news is bad.
All right, what about some of the other names that were hit today, Microsoft being one of them, and the list goes on?
Well, here's the thing. I've talked before on the show about that I felt 2025 was going to be a large rebalancing year. So what I would suggest is that people, especially who have just been very, very heavy in tech, maybe if you're going to wait for, excuse the pun, we call it a dead cat bounce, wait and see if you can get kind of a relief rally out of this thing. But you know what? What I'm is equally impressed with were all the other names that hit record highs today, Frank. A lot of them were financial stocks. So if people find they're heavy in tech but underweighted in some of these other areas that will clearly do well from the Trump administration's policies, it might be a good time to rebalance.
Right. It's been a head-spinning week or so since President Trump retook office with all the executive orders and so forth, and certainly putting in a business-friendly administration. And we just heard the news at the top of the hour that Scott Bessent has been confirmed as the new Treasury Secretary and seen as business as well as crypto-friendly. What about the cryptos here? We saw a wild ride today. Down to around 97,000 for Bitcoin, right now hovering at around 103,000, very, very volatile. And certainly the president has made it clear that it's going to be a very crypto-friendly administration.
Well, it's interesting. We were discussing before the show about I find this divergence between Ethereum and Bitcoin fascinating. This is the first time they've really disconnected. And one of the big mysteries that everybody's going to be asking about, especially with Bitcoin, is this very interesting relationship it has with NASDAQ. Well, if you're looking at NASDAQ not having the same kind of year that maybe it has had before in light of other things, but if the deregulation in the financial service area makes it more available for people to buy Bitcoin, and I'm actually a big fan of the stablecoins, Frank. I think there's going to be a huge number of new offerings throughout 2025. So I think it's wait and see on the crypto, but clearly the Treasury Secretary is a fan of crypto.
All right, we see a lot of activity in these meme coins. Had that big run-up last week and then pullback. So certainly it's buyer beware out there, right?
Yeah, it's buyer beware. And more than that, if you are going to trade, I'm a commodity guy, you study your commodities well before you ever commit capital to these things. So, don't go with dinner party or holiday party tips. Try to use some common sense. What I would just tell you is this. It's going to be interesting to see the earnings report from Coinbase because, everybody I talk to just exclusively do crypto, there's real concerns about hacking and fake coins and rumor, the old quintessential pump and dump, as they call it, which sounds a little crude, but it just means build in the hype. We saw this with the meme stocks during the COVID crisis. Be careful on these kind of things. This is a Wild West show.
All right, what about Ethereum versus Bitcoin here? We had the ETFs for both Bitcoin and Ethereum come out last year. What is the outlook for Ethereum?
This is a tough one. I thought personally, looking at it from the way that I do research, it looked like it had been, forming a nice bottom. It was beginning to head back up, meaning that there were going to be more buyers and sellers. And then suddenly it just inadvertently went off a cliff this month. So I'm still trying to figure out whether it's redeployment of money into Bitcoin, because it is most notably that President Trump, when he talks about crypto, he always brings up Bitcoin. I don't recall the last time he mentioned Ethereum. So we'll have to wait and see. I have a tough time believing that you're going to have just Bitcoin go up on this deregulation boom and not its close cousin. I really have a tough time believing that.
All right, crypto known as digital gold. What about good old analog gold? Let's pull up the gold price here in all of this. We did see gold, hover right now at around 2,742.50, still near its all-time high.
Absolutely. Actually, all the metals are really beginning to come into play. Copper, especially now with the tragedy of what happened with the LA fires, there's going to be a lot of need for a lot of these base metals. And then also, don't forget silver. Silver's an interesting play on AI to the second degree, because even DeepSeek, they all need a lot of silver to make these chips. They just do. So I think that silver will move up as well. But I'm having more and more people asking me about putting gold, silver, copper in their portfolios through the ETFs.
And speaking of commodities, a lot of talk about the rebuilding now here in Southern California. Lumber, certainly going to be big demand, and all the building materials for that matter. And I guess there's going to be a lot of attention focused on what type of building materials are being used in these houses. If you drive around Southern California now, you see virtually every construction site. You see wood construction. Of course, we're an earthquake country here, and wood bends when the earth shakes, so that's why it's used. But there's certainly going to be a lot of rethinking about the materials. But the demand for materials is going to be through the roof. It is.
It's going to be absolutely huge. And you can argue there will be some opportunities for companies that make composite materials, maybe some things that will be, as you say, Frank, marry between the two evils of fire and earthquake. There's a lot of things going on out there. But I would just say this. There's going to have to be a serious discussion in Sacramento about the lumber, the timber stock, especially in Northern California. There is a lot of perfectly good construction materials that the state's going to have to begin to say that, look, you don't have a right to go ask Oregon to cut down their trees or Canada, but you're not willing to do it yourself. So there's going to have to be some real thinking about where these materials can come from.
And we spoke on the day of the presidential inauguration a week ago, and we heard the president announce drill, baby, drill. We have seen the price of oil pull back. President's fighting inflation via energy initiatives, right? Oil right now hovering at around $73 a barrel, about $8 below where it was just a couple of weeks ago.
Well, there's several things in the crude, and I would also argue in the natural gas play right now. There's this tremendous seasonality, and it is true that in the wintertime, crude stockpiles typically build up. There's also the shifting around of the formulas between summer fuels and winter fuels. There's a lot of things in play within that entire complex, but the reality of it is that, the fact that there is now a green light for oil and gas companies to, certainly domestic production. And it's interesting because I get asked a lot about California. There is a little known fact, 45% of the land of California is owned by the federal government. And my understanding is a lot of that is in the Central Valley. So whether or not Californians want drill, baby, drill or not, there might be a need for it in the Central Valley, especially with natural gas. So there's seasonality and there's geopolitical things going on right now.
And over the years, of course, water has always been a big issue here in California. And I remember for a while there, they were talking that water was going to be the new oil from an investment standpoint. What are your thoughts about how water has suddenly become a big issue here?
Frank, it was interesting because I was flying in today to Burbank. It's amazing when you fly over and you first see that the reservoirs are surprisingly full right now. I mean, I was blown away to see a lot of them up there. But number two, you can see very easily that you could build some new reservoirs in some of these deep valleys. There's potential, and I think the president is right. Although I'm not a water expert, clearly there's places to put in much-needed reservoirs for the growth in population. But no, water has historically been part of California's fight north and south, and I think it's going to continue.
A lot of attention focused on the tremendous losses incurred in this firestorm here now, with the latest estimate in the $50 billion range, which makes it the worst natural disaster from a dollar amount standpoint. Certainly, it's also heartbreaking when you consider the death toll here as well. But what about the impact to insurance companies and really the overall economy?
Well, if history is a guide on this, there's usually public-private partnerships that are set up after these disasters. Whether, I know, Frank, for you coming from Florida, the hurricane tragedies, there's always a reaction to it, or certainly with what happened with Hurricane Katrina or the earthquakes. I think you're going to find the same situation. The only problem is that California's coffers are pretty dry right now, so I don't know how much they will depend on federal aid for that versus state aid with the insurance companies. But remember, a lot of insurance companies were pulling out of here because they saw it was very intrusive regulation. There has to be talk on that.
All right. How do you think this is going to be funded? We also are having the Olympics coming up here in 2028, and a lot of new attention focused on California's financial situation.
There is. And I wrote an article in Forbes last October that I would encourage people to go read. It was called, it's still titled, The Municipal Titanic. And I wrote this long before the fire was even a thought. But the reality of it is, we can get into a political discussion about this, but the simple fact of the matter is, according to the Hoover Institute, California's $1.6 trillion in the hole when all of its pensions are included. There's going to have to be real soul searching about how money is spent going forward and try to remove politics from the equation.
Right, and the city of LA's finances certainly being called into question as well, given this catastrophe here, and hopefully we'll get a lot of help. At this point, Ken Winans, let me ask you the big question here for the investors in the audience. Any specific places where you are putting money now and/or taking it off the table?
Yeah, let's talk some positives here, Frank.
Yeah.
I mean, we all know that there's some big hills that have to be climbed. So look, I brought it before. I really do think people need to look at some of these other groups. I am extremely bullish on financial stocks. When I look at, the Big Ten that I'm watching, but a name that most people maybe don't even know about is a company called Fiserv, symbol FI. It's an internet banking company, but it's been around for a very long time. It's evolved. I would just take a good hard look at that. But let me also give this caveat. We're in the middle of earnings season. Any company that misses its numbers is going to get slaughtered. But right now, I'm building up a position in that. I would also take a good look. The fact that Google is probably not going to be broken up now, that was always the big fear, which is a playbook of what happened with Microsoft during the George W. Bush administration. Google will probably be left alone. I think you want to take a look at Google it lagged pretty much last year with a lot of the rally. I would take a look there. But again, earnings are coming out this week. You might want to wait for that. But Frank, the other thing too, you want to take a good hard look at some of the building stocks because again, they are going to have to step up. The one that I've long liked is my favorite is Pulte Homes, PHM. Houses get built by companies, not by governments. And I think you have to include them in any solution.
Very interesting. Then there's LA-based KB Home,
absolutely,
based in Westwood. We're keeping an eye on that one. And by the way, Apple had a good day today in an otherwise mixed market, up more than $7 at $229 and change. What about Apple? We did see Tim Apple, as he's known, but Tim Cook is his real name there at the inauguration.
Yes, well, all the titans of tech who, after all the mudslinging for many, many years, it is like everybody came to terms and realized you have a pro-business administration. Again, you have earnings coming out, but Frank, I would be remiss if I didn't talk. We talked about Drill Baby Drill. Let me just throw out a couple of names. I would take a good hard look at Williams Company, WMB. They are an energy play. I would also, this is a fun little play because it's a real estate play, but it's also an energy play. Take a look at Texas Land, TPL, but it's volatile as heck. But these are companies that don't roll off the tongue. They're not tied to international events. They're domestic companies. Take a good look at them.
All right, and what about volatility itself? We did see the VIX index jumped today by 20% or so.
Yeah, I know it did. The thing is, the VIX is also interesting because August last year, you and I were having a lot of talks about the VIX on that one-day hiccup that we had. The way I look at it is as long as it stays below 40, I don't really pay much attention to it. It's tied to option strategies and a lot of the things going on there. But when you have a one-day hiccup like this, you be careful not to use one indicator by itself.
Ken, thank you very much for joining us live here on Mottek On Money on 790 KBC. Ken Winans, top-ranked money manager. Ken Winans, president and chief investment officer at Winans Investments, which you can find at winansinvestments.com. And Ken will be live again at 6 o'clock this evening with yours truly, right here on 790 KBC on Winning with Winans, which you can catch every Monday evening at 6 p.m. right here on 790 KBC. Ken, thank you very much, and we'll talk to you later then.
Thank you, Frank.
Out to the freeways now, 790 KBC. Mottek On Money continues here in 790 KBC. Good afternoon. DeepSeek suddenly bursting onto the scene. This is a Chinese AI startup which launched a free AI assistant over the weekend, which claims to use less data at a fraction of the cost of other services, such as ChatGPT. Looks like this DeepSeek immediately overtook the number of downloads at the Apple App Store today, exceeding ChatGPT, for example. And this led to a hit on some of the AI-related stocks, including Wall Street darling NVIDIA, known as the Magnificent One here, part of the Magnificent Seven tech names. NVIDIA shares closing down about 17% today, down more than $24, down $24 to $118 a share, a drop of about 17%. We'll talk more about. In fact, we'll take a deep dive into DeepSeek coming up here shortly with Daniel Ives, who's Managing Director and Senior Equity Research Analyst covering the tech sector at Wedbush Securities, based in downtown Los Angeles. The overall stock market posted a mixed finish, with the Dow actually rising by nearly 300 points today to settle at 44,713, a jump of 289 points to be precise. The S&P 500, which hit a record high last week, pulling back today by 89 points, and the NASDAQ took the big hit today, down 612 points to settle at 19,342, a drop of 3.1%. Bitcoin taking a wild ride today, right now up about 1,000 at 102,521. Ethereum up 33 at 3,193, and Doge at the moment at 33 cents. And now the latest news here on 790 KBC. Mottek On Money continues here in 790 KBC. The big story of the day, the Chinese startup DeepSeek causing a sell-off on Wall Street, raising the prospect of cheaper AI development. And some of the big tech names, including NVIDIA, taking a hit today, down about 17%. Joining us live now is Daniel Ives, Managing Director and Senior Equity Research Analyst covering the tech sector at LA-based Wedbush Securities. Daniel Ives, thank you very much for coming to the line this afternoon.
Great to be here.
Wonderful to connect with you and your team there at Wedbush Securities. I know you've had a pretty busy day today. I caught you early on CNBC on the big news as this story started brewing already last evening. We saw the futures move lower and the market opening lower today with the NASDAQ closing down more than 600 points. Tell us what we need to know about this DeepSeek.
Look, this is a white-knuckle moment, and obviously the narrative being built and tech stocks getting crushed along with NVIDIA is that this is going to be a dent in the AI revolution, and we actually disagree. I view it as a golden buying opportunity because this is a strong model from China in terms of DeepSeek, but there's a lot of sort of scale and issues here that really make this, I view it as just another competitive sort of arena, not changing where NVIDIA, Microsoft, Amazon, and others sit.
Tell us about how this whole thing came about. Most people didn't even hear about DeepSeek up until last evening, certainly, and today everybody is talking about it. Apparently, it was developed at a substantially lower price than other AI platforms, right? Tell us about this, how this got to this point.
Look, I think that's really what sent the white knuckles across Wall Street, is that it's a Chinese, essentially, AI lab that said that they were basically able to build what OpenAI has been able to build with $6 million. Now, again, there's a better chance of me playing for the Lakers than them actually building this for $6 million. Remember, it's a Chinese startup. You got to take it with a grain or a pound of salt. But the broader worry is that they were able to do this a lot cheaper than tech companies have been spending. But the reality is that as tech companies like OpenAI, like Meta, have built these models, the ability to basically copy that data has made models like this a lot easier to build. This doesn't change that the U.S. tech companies are going to continue to lead this AI revolution, especially in this U.S.-China cold tech war that's playing out today.
Very interesting. And so all of a sudden, DeepSeek overtook ChatGPT in downloads at the Apple Store. Apple, by the way, had a very good day.
Yeah, because, look, I mean, it speaks to Apple ultimately, regardless of it's U.S., China. That's going to be on the App Store, and they're really going to be the vehicle for we'll call it the U.S. and really global consumer revolution. The bigger worry here, and you'll see a lot of the bears come out of hibernation mode, is just a black swan event. Is this the end of the AI trade? I've covered tech 25 years. I view it as a top 3 golden buying opportunity that I've seen probably in the last 5-6 years for tech. So in no way does this dent our thesis. I think it's just another sort of shot across the bow at China that's going to be short-lived, as ultimately the new gold, the new oil are NVIDIA's chips.
Very interesting. So the release of this Chinese AI app did spook Wall Street today. What about the Chinese aspect of it? Of course, there's been a crackdown on Chinese tech development, and the concern about this certainly under the current the new Trump administration.
Yeah, I mean, this couldn't probably come at a worse time for China. And then, I think the timing is, very coincidental, especially as U.S. is looking at this TikTok ban. And look, U.S. they have the power because there's only one chip company in the world that's doing this. It's NVIDIA. And the hyperscaler is building in terms of Amazon, Microsoft, and Google. I think Trump administration is probably going to just further constrict export controls to China. This is clearly going to play a big role in terms of U.S.-China negotiations. But the narrative that China is overtaking U.S. tech is fictional. And I think that continues to really be how we've, sort of narrated through investors over the last, we'll call it through the weekend, and I believe continues to be a buying opportunity.
Breaking news just about every minute these days. If it wasn't for DeepSeek, we'd probably be talking more about TikTok. What do you think is going to happen with TikTok?
I think ultimately Oracle, and or Musk with X end up owning TikTok in some form. I think, they have 75 days to get a deal done. And if they don't want a deal, it's kind of a Don Corleone Godfather deal, or, they'll be shut down. So I think U.S. now is in a position to either have Musk or Ellison with a significant ownership stake in TikTok.
All right, zooming out to the bigger picture here on the NASDAQ, a lot of people were wondering, was this a dot-com bubble type of situation here today or a buying opportunity? What are you telling the folks out there?
Golden buying opportunity. I mean, to compare this to any sort of dot-com bubble, you just have Microsoft X committing $80 billion of CapEx this year. Meta's committing $65 billion. You have $2 trillion of AI CapEx next 3 years. This is a buying opportunity. It's basically just a white knuckle moment like we've seen the last few years, and those have really been the opportunities, right? But the bears that are in hibernation mode on days like today, they'll come out beating their chest, and I get it. Bears own today. Bulls will own the year.
So you like the Magnificent One. What about the other Mag 7 names?
I mean, look, to me, it's really you own Apple, Microsoft, NVIDIA. We love names like Palantir on the software side, Salesforce.com. And I think this is going to continue to now be sort of the second, third derivatives of what essentially is a fourth industrial revolution playing out. And with Trump in office, it's deregulatory, which I think you're going to have a lot more M&A, and that's bullish for tech, regardless of what was, a nightmare day for tech stocks today.
All right, and we saw a wild ride among the cryptos, too. How has this impacted the cryptos, you think?
I think just that risk off that we're seeing across the board, but when you look what's happened there, that's not stopping this train. I mean, when it comes to more and more, I think public companies, they're going to be looking at, owning at least some piece of Bitcoin in their reserves, at least in their treasury. And I think you're going to see more and more people investing in this area, as it's clear that the deregulatory environment is going to be very positive for crypto and Bitcoin. And I think under Trump administration, to be bearish on Bitcoin is the wrong move.
And even oil supposedly was impacted by this DeepSeek news today.
Because it's really more the derivatives. In theory, if you believe this, you would need less energy than the nuclear plays, ACOs, some of the grid players. That would be ultimately negative for, you'd say for energy. But it goes back to today's a blip. It's not changing. There's going to be more data centers under construction than active data centers. And I think it continues to sort of be an environment, you got to navigate these nervous white knuckle moments. And that's ultimately, I think that's been the playbook the last few years. It's going to be a playbook next few years. Given our view, we're only less than halfway through a tech bull market.
Daniel Ives, thank you very much for sharing your expertise with us here. Hope you and everyone there at Wedbush are safe following the firestorms, and appreciate your joining us live here and look forward to staying in touch with you. Daniel Ives, Managing Director and Senior Equity Research Analyst covering the tech sector at Wedbush Securities based in downtown Los Angeles, joining us live here on Mottek On Money on 790 KBC. Mottek On Money continues here on 790 KBC. More than 50,000 acres scorched here in Southern California, 28 people killed, and upwards of 16,000 homes and buildings completely lost in the recent firestorm, now flooding and mudslides in parts of the L.A. area following the first significant rainfall in months. The rain helped the Army of Firefighters here in Southern California put out most of the remaining fires in the catastrophic fire zones in the Pacific Palisades, the Hughes Fire in the Castaic area, and Eaton Fire in the Altadena area. Cleanup and recovery efforts continue now. It's a very difficult process with residents and businesses now in the process of making the tough decision on whether to rebuild or leave the area. Let's bring in real estate agent Tom Costello now, Estates Director at Tom Costello Estates, which includes the Pacific Palisades and Malibu areas. Tom, thank you very much for coming to the line here this afternoon.
Hi, Frank. Thanks for having me again. Great to be here.
Wonderful to have you with us here, Tom. Hope you and all of your colleagues, as well as as everyone in the area, doing as best as possible in this very difficult situation. What are you hearing from the folks in the area making these very difficult decisions at this time?
Frank, it is unbelievable, the devastation all over the place, from Palisades, Malibu, as you said, parts of Santa Monica. It's unbelievable. The people there are facing challenges that they've never even dreamed of. I mean, that being said, LA, specifically Malibu's had fires all along, and the Palisades, anytime you're in the wilderness, you face that reality. Yet to have this level of devastation, literally up to 16,000 homes, structures, buildings, businesses just leveled. It's just catastrophic. So people are literally scrambling to get shelter, to try to rescue some of their belongings, just to kind of reorganize and reorient themselves to just this kind of level of just chaos. It's literally unbelievable.
President Trump declaring a national emergency on Friday after visiting the Palisades area and meeting with the firestorm victims, residents there, and holding that big town hall meeting. A lot of frustration here about the red tape involved and so forth. Based on some of the folks you've talked to here, among those you interact with here in the real estate business, what is the talk among the folks here? Are people ready to rebuild or ready to leave the area?
It's kind of a mixed bag. People are still deciding that. That is definitely the hot topic. You know, what do we do next? Do we stay here? Do we rebuild? How long is it going to take? If we don't rebuild, where are we going to go? For those people who have, kids in the area and businesses in the area, they're trying to stay in the area, obviously, and as close as they can with getting short-term housing, Airbnb, hotels, staying with friends if they can. Even people putting, ads on Craigslist and Facebook of, a restored garage for rent, or an extra room, or if they have a next gen, which is basically an Airbnb or a little apartment built into their house. Those are wonderful. People are being as creative and resourceful as possible just to stay in the area, just to be able to have some kind of semblance of normalcy to their life.
And we are seeing neighbors helping neighbors, certainly in this situation. The hotels also accommodating many of the firestorm victims. Finding a rental apartment has become very, very difficult. You have thousands of displaced residents, and the homeless issue only getting worse. How are you helping the folks out that way? What's your guidance? I know you've dealt with a lot of disaster situations over the years here in that area with firestorms, mudslides, and the whole works over decades. What's your best advice for people looking to make these decisions?
Frank, that is such a great question, and I wish there was a simple answer. Click this link, and everything will be all right. The reality is everyone's situation is different, depending on what they need. There's so many people, just specifically in the Palisades, with animals, with the big animals, horses and cattle and farm animals. That is a whole situation that needs very specific care. Then there's people who have kids, and kids need very specific care. So many kids' schools have been destroyed, so they're trying to relocate. elderly people with specific needs with medicine and special care as well. So we are trying to do on a case-by-case basis, but there are several resources that we have on our website, as well as that we'll have it. It's being updated constantly, but the Los Angeles County Fire Department has some really fantastic resources as well, lafd.org. You can go there, and then at the very top, there's a blinking cursor that says Palisades Fire and Evacuation Updates. So there's maps, there's other things. Specifically, you mentioned a second ago, FEMA and what's being done, with the local authorities here in LA. The press conference that you mentioned a few minutes ago that Trump was here in LA and just saying, look, we got to remove the red tape. We got to get people in there now. There's people who want to jump in tonight and clear out the trash, clear out the rubble, and they want to start rebuilding. They need help, not just financially, but they need the roads cleared metaphorically and literally for them to be able to get through the red tape quickly and to be able to rebuild. And that's what people need. Otherwise, that place is going to be a wasteland for a long time, and it's destroying people's lives. It's not good.
Tom, well, thank you so much for taking the call here. We'll keep an open line to you on what's happening there in the Palisades area especially. That is real estate agent Tom Costello, Estates Director at Tom Costello Estates, which includes the Pacific Palisades as well as the Malibu areas and pretty much all of West Los Angeles, including Beverly Hills. Tom, thank you very much for joining us live here this afternoon.
Thank you, Frank. Great to chat with you again.
Thank you very, very much. And recapping the day on Wall Street, rough day for the tech names as we discussed this hour with the NASDAQ plunging 612 points, settling at 19,342, a drop of 3.1%. The S&P 500 coming in for a closing loss of 89 points today at 6,012. The Dow higher by nearly 300 points, up 289 at 44,713. Stay tuned now for the 790 KBC News Blitz with Randy Wang, and I'll be back with more at 4 tomorrow afternoon right here on Mottek On Money, 790 KBC.
Actor Michael Rosenbaum, he knows some of the most talented people in the business.
Let's get inside of Kevin Smith. This is a great house. Who knew playing Lex Luthor would pay this well? Now I want to see Gene Hackman's place, John Cryer's place. None will be as cool. And let's get inside of the great Tom Hopper.
I always love it when you have these long-form conversations because you do these press tours. They come with this energy, the host.
What's it like? So tough.
And I just love just having a normal conversation.
And that's sort of what the podcast is.
The Inside of You podcast. Follow and listen on your favorite platform.